Refinancing an underlying mortgage is all about timing, and the current pandemic certainly has impacted that. Can you give us the pertinent points boards need to know in normal circumstances and then in today's environment?
Sure. Good morning, Carol.
Good
First of all,
morning.
thank you to you, to Habitat, to the viewers. Thank you for having me. And I hope everyone's feeling good and safe in these very unusual times. So usually when Meridian Capital is approached by a borrower to refinance, it's for one of three main reasons. Either they're looking to lower their current mortgage interest rate from what they're currently paying, or they need capital for an upcoming capital project, or because their upcoming loan might be maturing and it now is absolutely the time to do it. Depending on an individual building's motivations as to why they're refinancing, allows us to go to the market and help them find the right fit in terms of lender to meet what it is they're trying to do. We have about 25 or so different lenders in the co-op space. Within those 25 different types of lenders, there are 5 lender types: portfolio lenders, CMBS lenders, life insurance companies, swap lenders, and the agency lenders. Each of those lender types then has a bracket of other types of lenders within them. The products offered by those 5 different lender types vary tremendously. Everything from the length of the loan term available, the rate lock, the rates quoted, prepayment flexibilities, and if a line of credit might be available, just to name a few of the differences. The main differentiating factors, I would say, boil down to rate being quoted, since that is one of the things co-ops like to focus on. And that can be either a fixed mortgage interest rate up front or a spread over an index, which gets secured and rate locked at an all-in number at some other point in time. So using that as the barometer of how we differentiate lenders also ties into the timing. The rate lock is a critical component of the timing of the transaction, and the borrowers need to ask certain questions as it relates to that rate lock. When is the rate locked? Is it at application? Is it rate locking after third parties are completed? Is it rate locking after a commitment is issued? Or is it rate locked at closing, or say within 2 days of the closing? When they're choosing their lender, they need to have this information available, especially in this unusual market that we're in. Because what happens if a rate lock is only for 60 days, but it's taking lenders 120 days to close a transaction, either in a normal set of circumstances or in these very unusual set of circumstances that we're living through right now. So depending on that lender type, it will impact the length of the rate lock and the length of the transaction. We have a kind of interesting breakdown of what lenders can do in terms of extending a rate lock or how much time they're giving. It is often at the lender's discretion, but some rate locks are what's known as a formal hedge, where there is no extra time without either severe penalties, severe costs to the borrower, or there may not be the option at all. If you remember when Hurricane Sandy happened in 2012, we had such a similar transaction. It's a good example of another time when things were outside of a borrower's control, but loans still had to close. At that time, we had a loan with one of these hedge lenders where it is a very hard and fast expiration date as to when the loan needs to close. It was the end of October when Sandy happened. The loan had to close by November 1st. New York was basically blacked out and half underwater. This lender was not located in New York, and the loan still had to meet the November 1st deadline. I personally, at the time, went to Brooklyn Heights, met the existing lender, picked up assignment documents, and hand-walked them to Midtown Manhattan to the title company to hand-deliver them. And they, from there, then found a courier to take them where the life insurance company at the time existed. Very extreme set of circumstances, but now with coronavirus, we're seeing similar unusual things have to happen in order to get a loan closed. So we're seeing no sit-down closings. We're seeing that attorneys have to coordinate extra steps with their title companies, with board members who have to sign loan documents. Notaries are a big question mark. So there's a lot of other factors that are going into the timing of the transaction that are making it outside the normal timeline that we like to factor. In a normal set of circumstances, we say the timing can be anywhere from 60 to 120 days. Depending on a building's individual motivations as to why they're refinancing, they may want more or less time. For example, were they hoping to start work in the summertime? Do they need the money in order to work when the weather is warm? Or do they have an upcoming maturity date? As long as we know going in what we're dealing with, we can work with the timing with the lenders going into the transaction to meet that borrower's goals. Right now, our concern is everybody's remote. Third-party inspectors are having a hard time getting into buildings at all. Surveyors, appraisers, environmental, property condition assessors. All of these things are creating delays. Lenders being remote, attorneys being remote, title companies being remote. This is all impacting the timing. So what we're seeing is that normal 60 to 120 days as a broad stroke generalization may take longer. And this may create a further backlog, which may impact loans coming down the pike that are thinking of refinancing. So your loan may not be coming due until 2021. You might think it's plenty of time, lots of time to think about this and discuss with the board. And our advice is try to get in front of it sooner rather than later, because we simply don't know. There's too many unknowns right now. We don't know how long the city may be locked down. We don't know how long before people can access properties for these site inspections. And we don't know what that's going to mean the longer it continues, how big the backlog may become. So our job as the mortgage broker is to keep everybody on the same page. Your attorneys, the board members, the management companies, the lenders, everybody on the lender's side. We handhold, we make sure everybody knows what timing we're working within and advise you as far as how long your rate lock may be from day one. So there should be no surprises to the extent that we can control part of the process, but we are advising clients start sooner rather than later because there are just some factors outside of everybody's control.
And if in today's environment, your building is having difficulty paying its mortgage, what would your advice be to boards?
Sure. I know this is a hot topic of conversation for people in this crazy time. So I think it's a little bit too soon to tell, to be honest. Generally, board members, shareholders pay their collections the month prior for the following month's payments. So for example, a March 1 payment would have been based on the February collections. What we've seen is that most co-ops were able to make their April 1 payments. We have not really received word of much concern for that. So it's a little too soon for us to say what will happen, and I think it will tie in largely to how long this continues. That's one component. The second is it will depend again on the lender that borrower may have selected at the time that they chose to partner up with the bank for their mortgage. Every lender has their own set of loan documents and presumably are addressing these things internally in their own way. And lastly, I think every building has an individual income makeup, meaning what goes into their overall collections. Is it a small 6-unit building where half the shareholders no longer have personal income? Is it a very large building where there's a large component of either commercial or professional or garage income coming in? What is the individual building's reserve situation and other cash that they might have available to them? So I think it will all play into the picture. And like choosing a loan, I don't think there will be a one-size-fits-all for them either. So I think it's too soon, but we are always here. Our proverbial doors are open. Our phone lines are open. We are always here for any guidance the co-ops may need.
Okay, thank you very much. Much appreciated.
Thank you so much, Carol.